The stock market has set 53 all-time record highs since the election. Think of that. 1 year, everybody's up, way up.
President Donald Trump has built a reputation as the pro-stock market president, overseeing record highs.
The S&P 500 gaining 13% at today's high in just 13 trading days. The only other time this has happened was the peak of the bubble in March of 2000.
While also triggering some of the market's sharpest drops.
Stocks going out at the lows, the Dow falling more than 1,600 points, almost 1,700 points. The S&P and NASDAQ just finished their worst sessions since 2020. All the major averages now in correction territory or worse.
Within just the first 2 months of Trump's second term, the S&P 500 suffered one of the fastest declines into correction territory since World War II, driven largely by uncertainty surrounding his tariff policies. Markets were rattled once again less than a month later after Trump's so-called Liberation Day tariff announcement pushed the broad market index close to bear market territory. But while the sell-offs have been dramatic, the recoveries have been just as remarkable. Both market pullbacks during Trump's second term recovered faster than the historical median of 34 days. One recent rebound erased a 9.1% decline in just 16 calendar days. That's tied for the 9th fastest recovery since World War II. So why is the market so resilient? Strategists point to a few things: AI, corporate strength, and investor psychology.
I think going into Trump 2.0, the market realizes that the president is a business-oriented president and the administrative policies will be toward helping to secure higher earnings and, as a result, higher share prices.
Experts say institutional investors now fear missing rallies more than enduring short-term losses, creating a powerful sense of FOMO, or fear of missing out.
So you have really a couple of generations of investors, not only individual investors, mind you, institutional investors, and have come to expect, understandably so, that every dip is a buying opportunity. To be fair, with only limited exceptions, they have been. So it's understandable where that comes from. Also, it's important to remember that it's easy to say, oh, this is driven a lot by FOMO and whatever else, but FOMO is a very real thing for an institutional investor.
The extreme fluctuations are being driven less by fundamentals and more by headlines, particularly those related to governmental policy.
We've been in a very headline-driven world, headline-driven market, and investors have just had to kind of strap on and get on the roller coaster and go along with it.
Trump has been responsible for the 5 best and 5 worst trading days of his second term. The single best day came on April 9th, 2025, when the S&P 500 surged more than 9% after Trump announced a pause on sweeping tariffs. If you remove the 5 best days of Trump's second term, all driven by his own announcements, the S&P 500 would actually only be up slightly since he took office. Instead, with those days included, the index has risen more than 20%. That level of direct presidential influence over markets is virtually unprecedented.
No other president has had this level of control over the fortunes made in the stock market. The only strategy investors need to follow is don't fight the White House, because you're going to lose and you're not going to make any money.
Trump's rapid-fire communication style has fundamentally changed how markets react to politics, and isn't likely to go away anytime soon. Even future presidents, experts say, may be forced to adopt similar tactics.
There's no going back. What we're witnessing is the democratization of communications. Even a president who comes in and tries to implement a very steady and routine mode of communication may end up having to adopt some of Trump's standards later because of the situation he finds himself in.
The result? A market increasingly driven by policy headlines and political messaging in real time. And according to many on Wall Street, that means investors' uneasiness may simply be the new normal going forward.
I don't know if we've ever had a market that's this fixated on the day-to-day news coming out of the White House. Under President Trump going forward, I think this volatility is just what we're going to have to get used to.